I had an email the other day from Ricky, a fellow trader, asking me if I could test out some of Toby Crabel's ideas on the Forex markets. So in this video, I am going to specifically test out Toby's NR4 or narrow range 4 breakout strategy. I'm going to test it across 11 different Forex markets and on 2 different time frames for each, the daily time frame and the 240-minute or the 4-hour time frame. So that's 22 tests in total. I've programmed Toby's NR4 strategy into multi-charts, which is the trading and development software that I'm currently using. So running those 22 tests across almost 15 years worth of data is very fast once I've programmed the strategy. I'm going to use the identical strategy for both time frames. The only difference is I'll be applying one to the daily time frame and one to the 4-hour time frame. Firstly, let me show you the version of this NR4 strategy which I'm going to use for the tests. Okay, the narrow range 4 or the NR4 setup in the way in which I'm going to test it. If you're going to look for these trade setups manually, then it's probably quicker, firstly, just to look for the inside bar. I've actually got down the inside bar as number 2, but if you look for the inside bar, and an inside bar is when the range is completely inside the range of the previous bar. So the high of this bar is less than the high of the previous bar, and the low of this bar is greater than the low of the previous bar, or the price range is inside that previous bar. But also, if we look here, the range has to be the smallest over those 4 bars. So the range of this inside bar, which is calculated by using the high minus the low, so the range of that bar has to be smaller than those previous 3 bars. And you can see in this case it is. So the range is the smallest and it's an inside bar. When we see that, that's our setup bar. And once we've got that, on the next bar only, we want to buy a breakout of the high. So I've marked this level with the dotted line. So if on this next bar here, imagine there was another bar here, price rallied above this breakout high, which is the high of the inside bar, then we go long. And the opposite, if it breaks down below the low of the inside bar, then we go short. It's a pretty easy setup. And for the initial testing on the 22 different charts which I'm going to do, I'm not going to use a specific exit. I'm just going to use a stop and reverse exit. So what that means, let's say that the price did break out above the high and it tended to rally on up, then the only way I'm going to get out of this trade is when we find another one of these setups, so a narrow range 4 and an inside bar, and then if it broke out to the low on the next bar, then that would be our exit from this trade, and also it would get us into a new short trade. That's what's called stop and reverse. If after that initial testing on the 22 charts I find some markets which do show some promise, then I shall look into those further and I will apply an X bar exit. I like using the exit after X bars in the trade because I think it's a good test of robustness. If I test exiting after 2 bars, 5 bars, 10 bars, 20 bars, and they all show profit and the results aren't wildly different, then I'm more inclined to believe that the entry signal does have a decent edge. But if those tests show that exiting after 7 bars, 13 bars, 19 bars perhaps, all made profit, but exiting after all the others up to 20 are all negative, then I wouldn't just use a 7-bar exit and assume that it's going to work into the future. It's most likely just a coincidence that 7 or 13 or 19 just happen to work on that particular data set. I'm much happier when the vast majority of the tests that I've done all show profitability and not wildly different from one another. I think you can see what I'm getting at. So now let's look at 2 separate portfolios using Multichart's Portfolio Trader. One portfolio is going to be those 11 markets on the daily time frame, and the other portfolio is going to be the 11 markets on the 4-hour time frame. In this first portfolio, we've got the 11 different markets down here, and you can see they're all on the 240-minute or the 4-hour time frame. We're looking at Oanda data from 1st of January 2008 through to when my data is updated till, which is about the end of October 2022. So let's have a look at the performance report. Here we're looking at the breakdown of symbols, so we're looking at each of the markets just individually. And we can see that net profit wise, there is a good few of them which do show some promise. So let's go through and look at the individual equity curves. Australian dollar, US dollar, that's kind of all over the place, isn't it? Sometimes been working very well, sometimes badly, then working well again. Euro pound, for the most part been working, but certainly not a particularly great equity curve, is it? Euro yen, as the net profit figure might suggest, working badly. Euro New Zealand dollar was working very well and then consistently badly. Euro dollar, all over the place. Pound yen, pretty much all over the place. Pound US dollar, and that's working quite well. Early years wasn't great, but then later years certainly trending upwards, isn't it? New Zealand dollar, US dollar, kind of all over the place. Recent times it's definitely been going up. US dollar, Canadian dollar, not very good. US dollar, Swiss franc was working very well early years, then just completely flattened off. And US dollar, Japanese yen, working well early years, flat, and then it's really picked up in recent times. So out of those tests on the 4-hour chart, I think maybe euro pound, definitely pound dollar, and possibly US dollar, Japanese yen does show some promise. Let's have a look at the daily charts. So now we're looking at the same strategy, just on the 1440 minute or daily charts. Let's have a look at the performance of each market. First of all, Australian dollar, US dollar. Oh, that's a pretty nice equity curve. It's been going up over those years. It has taken a downturn recently. Euro pound, not very nice. Euro yen, it's kind of all over the place. Euro New Zealand dollar, again, kind of all over the place. Euro dollar has worked well in early years, but then flattened off dramatically. Pound yen had a bad early years, but then really picked up. Pound dollar is pretty bad. New Zealand dollar, US dollar, it's gone up, hasn't it? But it's not particularly smooth equity curve. US dollar, Canadian dollar, that's not bad. Certainly from around the end of 2013 onwards, it's quite smooth. US dollar, Swiss franc is awful, and US dollar, Japanese yen is pretty good, especially in later years. So I think out of those dailies, Australian dollar, US dollar, pound yen, US dollar, Canadian dollar, and US dollar, Japanese yen show some promise. And I think they show a little bit more promise than the ones on the 4-hour, but we shall see. Now we have a short list of those 7 markets across the 2 different timeframes. I'm going to go over to multi-charts, look at each of those 7 individually and test some X-bar exits. So for example, if we're looking at the daily chart, I'll do some testing to see what happens if we exit after 5 bars or 5 days in this case, 10 days, 20 days, etc. But just before we do that, if you like these kind of rule-based strategies and you're looking for more ideas, then you can get my 22-page Beat the Markets strategy guidebook, in which I've got another 3 strategies, a little bit like this, which I've outlined all the rules and all the backtesting results. At the moment, you can get that for free. I'll leave the links for that down in the description down below. Better still, if you want to learn more about the best ways to trade these types of rule-based strategy, and you can get 6 more of these strategies, then enroll in my popular trading course. Again, I'll leave the links for that down below. Okay, let's have a look at testing those 7 markets further still. Let's first have a look at those 4 daily charts which we shortlisted. And what I'm going to do is I'm going to use an X-bar exit. So I'm going to say I want to exit after 5 days, 10 days, etc. I'm going to test from 0 through to 30 days on each of these markets. Let's start USD, Japanese yen. And you can see here's the input, my days in the trade. 0 is not using an exit, it's using a stop and reverse exit. 2, obviously after 2 bars, 4, etc., all the way to 30. Looking down the results, nothing actually beats the stop and reverse exit, does it? But if we did want to exit after a certain amount of bars, 22 is the best. 20 works quite well, looks quite stable. The good news is they're all positive, so I'm happy that that kind of shows that the entry has some robustness. Let's just select 20 and see what that looks like. Have a look at the performance report. There's the equity curve, and it's actually extremely flat, really, isn't it? Until about when it really starts to pick up in kind of 2020. So maybe something you could use in a portfolio, but it's not the best equity curve. Okay, Australian dollar, US dollar. Using the stop and reverse, made 65,000. The best being 20 bars, 20 bar exit. Although I would have said it was a bit of an outlier. Look at the results at 82,000. Going an extra 2 days, it's only 68,000. 18 days is 56,000. So the results are probably inflated a little bit, but nonetheless, they are all positive and it is within a stable area. Let's select it and see what it looks like. Okay, still very flat in recent times, so most of those gains were made in the early years on that strategy. Next one we'll look at is pound yen. Stop and reverse made 10 million, that's yen of course. Average trade of 48,000 yen. We don't come close to that apart from 26 days. Actually made more net profit. Either side of it didn't, but it is the best. There's not a bad area. Around 16, 18. Let's just select 26 out of interest, see what it looks like. Okay, it hasn't really changed from the stop and reverse, has it? We've still got that bad early period and then a little bit lumpy, but albeit going up since then. And the last one, US dollar, Canadian dollar. Stop and reverse made 89,000. Did we make more? Yes, we did make some more. 20 being the best. Average trade 348. That's a decent average trade. Not quite as good as the stop and reverse. Let's select 20, see what that looks like. And it's very flat through till about 2016, but then worked really nice recently. I wonder how long that performance will continue. Okay, that's the dailies. Let's do the same thing, but on those 3 markets for the 4 hour, starting with pound dollar. Now I've tested from 0 bars through to 60 bars, which you'll note is about 10 days, because 60 bars or 60 4-hour bars is equivalent to 10 days. Stop and reverse, 61,000. Average trade of only $29. It's not quite high enough. Where is the average trade? The best, 30 bars. And we've got a decent net profit, although 25, it's only 53. Let's select 30 just because it is the best at the moment. Equity curve is quite stable, isn't it? It's going up. It's a little bit lumpy, but it definitely is going up in the right direction, although average trade at $40 is low. Euro pound. Stop and reverse makes $6,000. Which one's best? 30 is best on this one. However, the fact that a lot of these are negative and there is quite a big difference between 25 bars making almost 14,000 and then 40 bars 7,500. The results are a little bit all over the place. The best average trade is at 30, although an average trade of $7.6 is very low. Let's just select that. And the equity curve hasn't really improved. It's probably not something that I would consider trading. I definitely wouldn't consider trading it with an average trade of $7. And the last one, US dollar Japanese yen. Stop and reverse makes 5.8 million. Looking through the results, they are all positive and probably more stable, aren't they? Going from, after we get to 15 bars, going from 4 million, 3 million, 5, 6 is the best, being 50 bars. Average trade of only 3.1 thousand, that's very low too. Let's just select that, have a look at the equity curve. And the equity curve is still bad, isn't it? It worked well early, went completely flat, and then it's just started working again. Looking closer at the results from using the daily charts, I think all of them could be a possibility. The next thing I would do is look at a stop loss placement, and this could be the other end of that inside bar, or maybe just a fixed pip stop loss. Although I don't expect the stop loss on this strategy to improve it a great deal. I would also like to look at some different exits. We've seen that the X bar or X day exit works quite well and it's stable. But I'd also quite like to look at the bailout or the first profitable close exit, because I think that could work quite well with this strategy. For the 4-hour charts, it's clear that pound dollar works best, and I don't particularly like the results for either of the other two markets. But even though those results for pound dollar on the 4-hour do look usable, the size of the average trade is still far too small. I think when we run the optimizations, I think the best or the biggest average trade we saw was about $40, and that doesn't include costs. So once we've added costs to that strategy, at $40 for an average trade, that's going to be a money-losing strategy. So to sum up today's testing using the narrow range 4 or the NR4 strategy, I do think there is some potential using those daily charts, and be interested to check the weekly charts too. Let me know if you'd like to see some more development and some more testing using this NR4 pattern. Leave it in the comments down below. Anyway, thanks for staying to the end of the video. If you've enjoyed it, please give it a thumbs up and maybe subscribe for more. But until the next one, this is Jared Goodwin, and thank you.